Hey guys, and welcome back. Today I am joined by the man, the myth, the legend himself, Mr. Wonderful, otherwise known as Kevin O'Leary. How are you doing, my friend? Welcome to the channel again.
Great to be here. Thank you.
Absolutely. Well, like I said before we started, I wanted to kick off our interview today with something on a little bit of a personal note. I've heard that you are a massive watch collector, and I wanted to ask you, what watch are you wearing right now to start with?
Well, I am a pretty big supporter of the horological movement, if you want to call it that. I'm a member of the Horological Society of New York, which I consider a great honor. Just got inducted recently. Right now, I'm wearing the Hulk, a all green Rolex, which is one of my everyday watches. I wear a lot of Rolexes, but by no means is that, my only brand. I mean, I love Rolexes. It's the three horsemen of collecting are Rolex, Patek Philippe, and Audemars Piguet. But once you've filled your portfolio with those, you've got to go off piste, as they say. And the next hottest watch right now is FP Journe. There's nothing hotter on earth than an FP Journe watch.
That's wonderful. Well, I also wanted to ask you on that because, we're talking about finance today. We're going to talk about geopolitics. We got a lot to talk about as far as interest rates, the Saudi Arab Emirates. We're going to talk about that. But one of the first things I want to talk about to your passion of watches is that the CEO of Rolex actually recently just came out and said that due to energy concerns in Switzerland, they're going to be cutting production of Rolexes in half. And I just so happen to have a Rolex repair person who is an in-law of mine staying with us right now. And he told us that Rolexes are actually a really great investment. And he used to have people coming into his shop and they buy a Rolex every single month because they appreciate in value. We're going to talk about a lot of different things to invest in right now, but could Rolexes be a great investment for the next 12 months?
Well, they have been. My watch collection has beaten every other asset class I have over the last 3 years. And so, the thing about Rolex, you should understand at the peak, before the crypto correction, because there's really interesting analogy between crypto prices and watch prices. And a lot of the buyers of the more eclectic brands are people that trade crypto. And so watch prices have corrected. And this is a very unusual situation. I mark to market my portfolio every 24 hours. There's all kinds of technology now that gives you the last trade anywhere on earth of every piece made. So I have that technology and I track the values. And so the Rolex market, a good one to look at because it's so liquid and so large. They're the largest high brand watchmaker in the world. They make millions of units. It's down 28% from the high, but you're still up 40% had you bought the watch in retail. And today, you can't buy a Rolex at retail. There is no inventory anywhere on earth. And so the secondary market is where all this trading is occurring, and it's volatile. But there's nothing like watches in terms of what's happened over the last 3 years. There's no asset class like it. I'm still way up on my portfolio and continue to buy watches because unlike automobiles, which really have a high storage cost, and gold bars, which, have no interest, and gold has not performed that well lately, Rolexes and APs and Patek Philippe's and FP Journe's. FP Journe has beat everybody in terms of an investment. These are assets that people in Asia can put in their pocket and travel to North America and stick in a bank vault, which is really what's happened to watches. That's what's occurring.
So I guess in a way, they have a lot of the similar characteristics to what Bitcoin has, is that they're very portable. They're divisible to a certain extent, maybe not so much as Bitcoin, but they also have that scarcity that allows them to increase in value. That's interesting. I've never even thought about the connection between how almost cryptocurrencies and Rolexes operate. And that's one of the things I also want to talk to you about is that I've heard there's a lot of people in the more traditional world that are, watch collectors or investors or real estate investors or people in Hollywood or people high up in government that are regulating that are starting to step into cryptocurrency because they're starting to see what you see, which is that crypto and Web3 is a form of software. And you have a very unique perspective from a lot of people being involved in so many different areas. Is that a trend that you've seen from the people that in watch collecting and regulation and in TV moving into crypto because they see it as software?
Yeah, there has been a movement to understand this at the political level and at the policymaker level, certainly on the Hill in Congress, where we do have some bills that are getting close to markup. The Stablecoin Transparency Act is the most interesting piece of legislature out there right now because it has bipartisan support in a very partisan market. And so we have the midterm elections in just over a week on the 8th, and we think that that bill will start to march its way into law after that midterm election occurs. And that just deals with stablecoin around US dollar. And so it'll be companies that are willing to go through the process of getting regulated that use the US dollar as the backup to their token. And USDC would be a good example of that. The reason it's got bipartisan support and the reason there's so much interest in it on both sides of the aisles is it makes the US dollar by default as a payment system the world's default currency. Now, right now, the US dollar is used for energy. Obviously, a barrel of oil is traded in US dollars, but this changes the game. It makes any payment system anywhere on earth, anytime, totally transparent, totally productive, very inexpensive compared to SWIFT or ACH transfer, much faster, and actually is very good in terms of keeping the bad guys out of it because you know both ends of the transaction. And so you've got a lot of politicians supporting this movement. Now, the reason I like this as a Bitcoin guy, because I got a lot of positions in crypto, is it's not specific to Bitcoin. In fact, it has nothing to do with Bitcoin. But when you see this policy go through, should it go through, it's going to indicate that we're getting policy in crypto markets, and it's going to lift Bitcoin itself, I think, 10 to 20% overnight. That's a speculation on my behalf, but I'm certainly positioning myself that way. I'm very optimistic that should the Stablecoin Transparency Act become law, it's going to lift all things crypto.
That's really exciting because there's a lot of different things that people are talking about in the realm of regulation, finance, the Federal Reserve, where we have bullish and bearish things coming into play. Like you've been talking about, we have finally some kind of regulatory clarity, at least in some elements of the industry coming in. But we also have things like the effective federal funds rate being hiked. I mean, we're recording this on the 1st. This will probably go out a week or so after this. So the decision that's coming out tomorrow, November the 2nd, will probably come out, which I think is more than likely going to be 75 basis points. But where do you see the general next like 6 to 12 months outlook for cryptocurrency, considering that we have, yes, bullish things like the Stablecoin Act, but you also have bearish factors such as the effective federal funds rate being continuing to rise, leading to a stronger Dixie, which is inversely correlated with Bitcoin, leading it to the downside.
Yeah, you have that. However, I'd argue that this 75 basis point hike, which is 100% certain, is completely baked into all markets, the equity markets, the debt markets, the crypto markets. It's in there. What is not resolved yet, which everybody is waiting for, is what is the terminal rate the Fed is going to actually slow rate hikes or stop them altogether. And the reason there's optimism on that is you've seen the Canadians do this. They were supposed to raise 75 basis points. They only raised 50. And then the British are making noise about this, the Swiss, the French. Other markets are starting to say, wait a second, we're going to slow down the pace of hikes. Now, the Fed has not jawboned that at all yet. However, the market is making the assumption that if every other economy is doing it, it's just a matter of time before the Fed does the same thing. And if we end up at a terminal rate of, let's say, 4.8, 4.9, or under 5%, that's still a historically very low rate. Now, it has rocked some markets. Housing is a good example. And, the housing mortgages now are 7% for 30 years and higher. So that's going to slow that market down, which is actually what the Fed wants, because housing shelters 40% of the CPI measure of inflation. It's a trailing indicator. It's a lagger. So it's not baked in yet. So when you see an 8.2 print on inflation CPI, the truth is it's probably not 8.2. It's more like 6, because 40% of it has not been registered yet in the slowdown in housing. So a lot of moving parts I'm talking about here, but the optimism of the market is saying, well, maybe there's a chance of a soft landing. Sure, there's pundits on both sides of this debate, but right now, another day, another month, we had a phenomenal month, up 14% on the Dow. If you were not in those days, those 14 days, you missed all of that return. That's the trouble with trying to time the market. It's impossible.
And that's where it really comes into trying to keep your money in the market for a long time. And that's where I think a lot of people are right now. They're wondering, well, is now a great time to buy Bitcoin? Is now a good time to get into other assets that are lower? You have the SPY and the DJI down about 20 or so % from all-time high, a little further than that. A lot of people are wondering, is now a good time to get into the stock market? Is now a good time to get into the cryptocurrency market? And a lot of people are wondering, again, what is that terminal rate that you're talking about? Is it going to be 4.8, 4.95? Are you looking to, and you don't have to go into too much detail about your personal investments, but are you looking to get into Bitcoin right now? Or is right now a kind of a time where you'd say, I think that we're close to the bottom, but I'm not really sure, so I'm going to hold off? What does that look like from an investor standpoint?
Well, let's take that question in two parts. Let's deal with crypto first, all right? And then we'll talk about the stock market. We can even talk about the bond market. I play in all three of them.
Mhm.
The crypto market right now is really interesting, and here's why. This is one of the first years where everybody that trades crypto knows they're going to have to report. Let's say you're trading domestically in the US. You're going to have to report your gains or losses. And let's say you're like me and you have a lot of positions on. You've got 32 plus positions. Many of them are way underwater, but I don't want to give up my exposure to crypto. So what's going on my trading desk in our operating company right now is we're looking at every single project we're involved in. We're looking at the loss we could harvest. In other words, if I'm down 70% in helium or something, maybe I take that position, go back to USDC, then trade it into Bitcoin for the next 31 days, because that's the wash period, or 60 days, depending whatever your wash period is based on what your institution compliance says, or you individually have to comply to. Because if you're going to do that, you're going to get the tax loss benefit harvested in 2022 and still keep on a position in crypto. Now, here's the debate, because I just before we got on together was talking to my operating trading desk about this. There's an intrinsic assumption right now that Bitcoin is a good proxy for any crypto. It's really hard to see some project moving north of Bitcoin gains if Bitcoin is going to be stuck in a trading range of 19 to 22,000. Now, the assumption I'm making, and I'm giving you a lot of detail here because it's food for thought for everybody that's trying to make this decision over the next 6 weeks. If you're going to harvest your losses, you basically have to December 15th because things could get thin after that. I'm talking US domestic now. I'm looking at these positions every day and saying, okay, let's take off that Polygon position, or let's trade that Polygon position for the next month into Bitcoin and go through the tax period and then reposition at a new price, a new ACB, average cost base, because this is the first year that everybody's worried about the IRS. The IRS didn't give a damn about this 2 years ago. Now they do. Even my own auditors, even our compliance department is saying, Kevin, what are we doing with our crypto portfolios? What's the plan? Let's go through every single position and harvest our tax losses. Now, I don't think Bitcoin is going to trade past $22,000 until we get policy, but it doesn't have to be Bitcoin policy. It has to be any policy, which gets full circle back to what I was talking about with the Stablecoin Transparency Act. Give me that policy. I want to be long Bitcoin when that hits, if it gets cleared into law, and Katie bar the doors, because institutions are going to smell the same thing. And the asset that they want, if you could pick, let's say, 4 positions, I'll tell you what they would be in my view from an institutional client. It would be Bitcoin, it would be Ethereum, it would be Polygon, and USDC as a payment system. You could get full exposure to the volatility of crypto with just those 4 positions, with the stability of your payment system being USDC. And I think that's what's going to happen. You're going to see a rise in those positions almost immediately. It doesn't mean Solana is not good. It doesn't mean there's other projects you shouldn't own. But if you want just a core holding into legislation, I'd recommend those 4.
So would you hold those until that legislation comes to pass, or we start seeing some movement on that or some other kind of legislation in the United States, it being the world economic leader? Or would you hold on to that until we finally see that topping out on the effective federal funds rate? Because a lot of people are looking at the rate hikes and looking for that peak interest rate, but it sounds like you're actually a lot more interested in the policy that's going through Capitol Hill right now. Which one of those would you say is more important to the future of crypto?
Policy. The number 1 issue around crypto right now is policy. Number 2 issue, policy. Number 3 issue, policy. And I'll tell you why I say that. I represent and I'm very close to the indexing markets. I do indexes for sovereign wealth, pension, hedge funds, universities, endowments, all that. Let's say you're a very oil wealthy emirate in the United Arab Emirates and you make 250 million US dollars a day. That's not uncommon. Where do you put it? You put it into the S&P, X oil stocks, X airlines, because you already own those. And so indexers like me make those indices. When I talk to those people about what they're going to do in crypto, they would love to index 1 to 3%. I ask them, well, what would you want in that? They say, we'll just do Bitcoin. It's so correlated to all projects. We'll just do 1 to 3% in Bitcoin. They don't own any yet. None. 0. For all the excitement about crypto, the real money, where 70% of the world's wealth is tied up in sovereign wealth and pension plans, owns 0 crypto. If they could get their hands on it, they would buy Bitcoin. which is why it's so interesting. The Canadians have an ETF where the underlying is Bitcoin. They also have an ETF where the underlying is Ethereum. But the institutions won't buy it because their compliance departments do not allow them to own it because there's no policy in the US. So my whole investment thesis here is you go long Bitcoin and you wait, because you either have to do it after this policy, in which case you probably leaves 20 to 30% price appreciation on the table, or you go in now and you simply wait. But I'm telling you, you're not going to get past 22,000. It's going to be stuck in this range for quite a while until we get policy.
I would definitely agree with that. And that's interesting to hear your take on the policy. But what, I mean, just to kind of push back a little bit on that, because I totally agree with everything you said. But if that's the case, then how did Bitcoin manage to go to $69,000? Was that all driven by retail? Was that just driven by institutions like MicroStrategy that were a little bit more risky and they were willing to jump into Bitcoin? What allowed us to go there at that point if we're not able to go there now because of the sovereign wealth funds and pensions not being able to get in?
I'll tell you how that happened. Leverage and idiot managers combined together. Because what happened here is 5, 6, 7, 8, 9 times leverage on platforms run by managers who have never had experience with an asset class like this. And all of them are wiped out. And that's a good thing.
Right.
All of these bankruptcies you've seen are a result of leverage. And it's very important that you take the idiot managers and get them out of the equation. All the idiots are gone. And what's left are managers that understand the volatility of Bitcoin and the risk inherent with leverage. And so those days are gone forever. Also, these algorithmic stable coins gone forever. 60 billion erased. It was decentralized, so it wasn't just in the US. But all the idiot managers are gone, and that's a great thing. And I would argue that the industry is much stronger for it with the idiots gone.
I would completely agree with you. I mean, you saw Luna, you saw UST go down, you saw Celsius, 3 Arrows Capital. Now we're seeing, I don't know if you've seen it, a lot of the miners are starting to go down. We had Core Scientific go down. Well, actually, they haven't filed bankruptcy yet, but it seems like they're going to. It seems like they're going to be insolvent next month. We've got Argo Blockchain, I believe is the name, that they just said that they won't be able to, that they just lost a $27 million funding round. So we've got so many people that were investing and they went way too hard. And when Bitcoin dropped down to 19 or 20, they couldn't keep it. Whereas you have other investors like, Michael Saylor, they have a liquidation price like $3,000 on Bitcoin or something, where they took leverage, but they didn't go so aggressive. I call that concept on our channel bedrock. Like, we've hit the bedrock. Everybody else has been washed away by the wind and the waves, but what's left is that core strong foundation. And it just so happens to be at the previous bull market's all-time high. Well, then,
let's talk about what you brought up there with Bitcoin miners, because the worst has not yet happened. Many of these miners got into contracts where they couldn't fund the purchase of stacks, machines. And so what they did when Bitcoin was up at $25,000 to $30,000 is agreed with contracts saying, if you lend me the machines, I'll pay you back on the awards with a floor of 25,000 or a floor of 27,000. Guaranteeing a Bitcoin price is an idiot manager. And so what happened there was, now they're sitting with these contracts. They've got the stacks. They're being awarded coins, but they have to give them up at a price that's 20, 30, 40% higher than what Bitcoin's trading at. So they're effectively, every time they get awarded, on their way to bankruptcy. So you're going to see a lot of this happen, a lot of machines coming on the market. The prices have come way down on Bitmains and everything else. And we've got to flush out the idiot managers out of mining as well. And the other problem you got with mining is Larry Fink and the ESG mandates around just tying miners to the grid. You got to have hydroelectricity behind the grid, hydroelectricity or nuclear power. Those are the two that get you away from basically buying carbon credits. Everybody knows that carbon credits are bullshit, and the SEC is chasing that and forcing you, and they want in their latest memo. You can look at exactly what happened to the prices of Bitcoin miners that were public in the US stock exchanges the minute the SEC memo came out saying, we're going to get you to sign your carbon credit audits. No auditor is ever going to sign something that says, oh, this Bitcoin miner bought 5 acres of the Amazon jungle and they're no longer, and now they're carbon neutral. Everybody knows that's complete BS. And so you can't get anybody to sign that. That carbon credit market is screwed. And so at the end of the day, if you're going to mine Bitcoin, you better find a place where you've got power that has nothing to do with emitting carbon.
Yeah, absolutely. That's something I've been talking about is that all these miners going offline, they're selling at 30-40% discount. And then you're going to get miners that are actually buying these miners with money that they have rather than pursuing extremely risky financing. And they're going to be able to buy all these miners. I mean, Argo blockchain, I think they just said they'd liquidated 4,000 Antminer S19, SJ19s. That's a ton of miners that they had to sell like $3 million less for the batch than they had originally planned. Those miners are going to be a lot cheaper. And then the miners that purchase those are going to be able to use those miners to make more profit and cover themselves and hopefully not go bankrupt this time. But I think you're right. There is going to be another big capitulation on that front. But let me ask you another question about the Saudis, because you just recently became an Emirati citizen, as you've been talking about. And I just want to ask you a little bit about that and pivot in that direction, because as you said, there are some people over there that are making $250 million a day, and they're all looking to get into crypto. Everything's going on in Dubai and in the Saudi Arab Emirates right now. Why did you choose to do that? And what are you seeing going on over there regarding crypto?
Well, I'll tell you my journey. The United Arab Emirates and Saudi Arabia are two different markets, obviously. But when you look at the Emirates, Abu Dhabi, that is been awarded now for over 5 years the safest city on earth. It's an incredible place. The rulers there are very advanced in their thinking. 50% of the management of the country are women. I've been very successful investing in women over the last 14 years. That's where I've made 75% of my returns. So that was very intriguing for me. But when I went and met with the ADGM, which is the regulator there, started to look at that market, because it's one of the fastest growing markets in the world. People really misunderstand the Middle East. It's booming. It's absolutely booming, and it's growing faster than anything we've got in North America. So in order to be able to work in the financial services market, it's much easier if you can be awarded a citizenship. There's a protocol to get it. They do a lot of research on who you are and background checks and everything else. And it's a long, arduous process, but it's worth it because it gives you free movement inside all of the Emirates. And it's a very good way to actually do business over there because it takes all the friction away. And I want to do business. I'm on my way over there next week. I'm going to be spending the next 2 weeks. The Formula One is being raced in Abu Dhabi. The world is converging there. There's a lot of interest right now in policy in the US regarding Bitcoin, regarding USDC. And so I want to be at the cutting edge when that policy hits. And I definitely want to be in that market because you're right. They have not bought any crypto yet, virtually nothing at the government level. And the FAB Bank is over there. They've got 5 million accounts. I mean, people do not understand that part of the world and the tremendous potential of it. I'm just one investor, and in my portfolio, I'm definitely getting involved with the United Arab Emirates. No question about it.
That's so interesting because obviously they like to do everything bigger and better over there. And I'm sure that the leadership over there realizes that oil is something that they're having to transition away from. The Middle East obviously realizes this, that oil has made them so much money over the last 50, 70 years. But eventually, with the world moving in a green direction, that's not going to be sustainable through the second half of this century. So they're trying to pivot in a lot of other directions. And like you're talking about, one of the directions that they're trying to pivot in is financial services. So it would only stand to reason that if the government and the big power players over there aren't already massive fans of crypto, that they would be at some point soon. So what does that look like? Do you think that they're going to try and, be the world's biggest in something like their sovereign cryptocurrency wealth management portfolio or something to that effect? Do you see the Saudis and the Emirates getting into crypto in a big way to kind of help shore up their economy in the future? They've got tourism, they've got financial services right now that they're gunning for, but could crypto and that market be something that they push into heavily in the next decade?
You're 100% right. Financial services and a compliant platform out of Abu Dhabi is the goal, because that could become effectively the Paris of the Middle East. I mean, it'll become the London of the Middle East, whatever analogy you want to draw. It is very pro-business, very low regulations. All they want is compliance with the countries they do business with. So the UAE is not going to be rogue on crypto because they do so much business with the United States and the SEC. So they're waiting for policy. If you look at what happened with the SEC and the OSC, here's a case study, a use case we should think about. The OSC is the equivalent of the SEC except in Canada. The Canadians were the first to award a broker-dealer attached to a crypto exchange in the world. They did it in Ontario, and they made it compliant. So every Canadian citizen can open an account and buy Bitcoin in a compliant fashion in every province. Now, that order was generated by the OSC under the auspices, one assumes, of the SEC. So effectively using Canada as a guinea pig for policy, seeing how it worked. And shortly after that award was given is when you saw the first ETF trade in Canada with Bitcoin as the underlying. And then the second ETF was Ethereum as the underlying. So Canadians can buy it as a stock. They can buy the coin itself. There's all kinds of ways for them to own it. Whether you're an institution in Canada or an individual, it's compliant, it's legal, and it's reported to the tax authorities. The UAE is no different. They're looking at that policy saying, this could work for us too. The only thing for them is they want to see the SEC issue the policy so they know how to stay within the borders of a country they do so much business with. The majority of the money that comes out of the United Arab Emirates or Saudi Arabia ends up in the S&P 500, which is regulated by the SEC. So all of this leads back to what you and I were talking about earlier. Policy, policy, policy. If you're someone who believes that the only way to enjoy owning crypto is on a decentralized rogue basis without any compliance, you're nuts, because the amount of value that we could get by getting policy in this would take Bitcoin past $100,000 eventually, which is why everybody owns it in the first place. But there's no way it's going there until there's an institutional sovereign wealth bid.
So then if that's the play on crypto in the next, let's say, half decade, what does dreamland for crypto look like with the SEC? Because obviously, I mean, the entire world, more or less, excluding China, follows the FAA, for example, on their aviation guidelines, because the United States is the leader. People, as you're saying, do the exact same thing with the SEC in the realm of securities and stocks and everything. So what does it look like when Bitcoin and cryptocurrency are set up in a regulated fashion exactly as they need to be in the United States so that everybody can do that? What does that look like, and where do you think that dreamland for crypto regulatory wise sits in the future? How far away is that?
Well, let me tell you what it looks like. Step one in 2023, bipartisan bill legalizing and regulating stablecoins backed by the US dollar and treasury bills. 100% that's going to happen. I may get the timing wrong by a few months, but the reason that would happen is in the economic warfare we're getting involved with in China, where the Chinese are trying to digitize their currency. I would never own that currency. I would never trade it. I would never even put it on my blotter, ever. I would never do anything with that. I need something that is backed the faith of the US dollar and regulated. And that would be a stable coin that's audited every 30 days that has either one-to-one with the US dollar or any treasury bills in it are a duration less than 12 months. That's what the act says. It's a very simple act. If that happened, you could see USDC, like Circle, for example, wouldn't be the only one, but that would become a very powerful platform for everybody all around the world, more transparent, much faster, lower cost, completely efficient and productive. And it would be effectively making the US dollar the default currency worldwide. That happens first. That's stage one. Then the Digital Commodities Act, we look at that for trying to figure out what we're going to do with Bitcoin and everything else on the blockchain, including NFTs, to use them for authentication in all of the 11 sectors of the S&P. That's how it's going to happen. Stablecoins first, then Digital Commodities Act. And these things will move forward at their pace based on how fast Congress can deal with them. But at the end of the day, there's no question in my mind why you should own some portion of your portfolio, should own crypto, is because of this march forward on policy. This is actually going to happen. And if you don't own this, here's a problem you've got. There's two risks in the market. There's the risk of owning crypto, but there's also the risk of not owning it. There's a reason Jamie Dimon is going nuts on Capitol Hill. He knows that when he is taken into competition with something like a stable coin, the fees he makes on transferring capital on his ACH transfers and his SWIFT transfers between countries and geographies, he's going to get killed. He can't compete with how inexpensive it is to use a digital currency like USDC. And so whatever value is now held in JP Morgan stock will get transferred to something like a Circle. So if you don't own any Circle, you're going to miss out on that transfer. That's why crypto will become the 12th sector, the S&P. That's the risk of not owning it.
So then the entire global banking system, more or less built on SWIFT and the US dollar, could theoretically and seemingly almost certainly transition into using USDC and a stable coin. And you would probably see that stable coin worth a couple $1 trillion at that point, right? And all that money is right there in crypto, ready on a moment's notice to be transacted into crypto. So, I mean, that sounds like those are the two big things that you're talking about: the sovereign wealth funds, the pensions of the world. A lot of oil money in the Middle East want to get into crypto, but they don't have the regulatory guardrails to get into it. And then you have stable coins pretty much overhauling the entire international banking system. Are those the two big regulatory elephants in the room, if you will?
They are. And that's why there's so much discussion. If you're in the financial sector, which is one of the 11 sectors of the S&P, you've got every lobbyist and their dog in Washington trying to slow down this transaction, because at the end of the day, they threaten your profit margins. It doesn't mean it wipes out money center banks. That's not going to happen. They'll adopt crypto. They'll start putting it on their trading desk. They'll be part of that sectoral move. But the actual efficiency and productivity of blockchain and what's going on digital and cryptocurrencies is very, very productive. And so you can definitely see it over the next decade become the 12th sector, the S&P, servicing all 11 sectors. I mean, I want to if I'm doing a real estate transaction in Switzerland, I'm not sending over US dollars to the ACH system. That takes 3 days and costs a fortune. I'd rather just transfer it in less than 1 second on some very high-speed chain, maybe Miston or whatever emerges as the high-speed chain. It won't be Ethereum in my view, but that doesn't matter. Whatever the productivity is, it's going to be better than what we have today. And that's my whole point. So if you're going to ignore that transition, it's like saying the internet is only good for pornography back in the 90s when it emerged. The truth is the internet has touched everything in every sector today. The same thing's going to happen with cryptocurrencies.
Wow. That's incredible. So we're running out of time here, but let's just take it full circle with one final thought. The average guy, he's got, let's say, $10,000 to $50,000 that he wants to invest. Let's say even less than that, whatever. The point is that we have average Joe, and he wants to get into cryptocurrency, and his primary concern is fighting inflation, because as he's watching prices go up massively, he knows he's losing value in the US dollar. He wants to get away from that, and he also wants to position himself in the next 10 years to build generational wealth. All right, we got this guy. What does he do today and over the next 12 months to be able to position himself or herself so that they're able to make sure that they are fighting that inflation and also growing their wealth in a way that they can leave to their kids?
You know, you need diversification in any sector. There's a rule that plays out in sovereign wealth and indexing, and it's a very simple rule. It says no more than 20% in any one sector, no more than 5% in any one position. So you can apply that also to crypto. So if you had $50,000 and you were going to decide, look, I want exposure to the crypto market, break it up into $10,000 chunks and buy 5 positions. So it would be definitely Bitcoin. It would definitely be Ethereum. Polygon reduces gas fees. It's a very interesting platform and has lots and lots of apps on it, which is what you need to be a profitable chain. Then USDC is a payment system for sure. And then take a flyer on something like Solana, or, you know, something that is attempting to speed up transactions. And that's enough diversity, but they all trade, with the exception of stable coins, which are stable coins when they're backed by the US dollar, in tandem right now to Bitcoin. Bitcoin is the granddaddy, and it's the one that most institutions want to take a position in. It's a storage of wealth. I'm not sure I'd use it as a currency. You know, I keep telling everybody, Bitcoin's not a coin. Polygon's not a coin. USDC is not a coin. It's not. Polygon's not a coin. It's all software. And if you think Microsoft added value to the economy or any of the other software platforms, you would be right. So you should start thinking about crypto as being software that's extremely productive for financial services. That's the way to look at it.
Wow. That's incredible. Well, Mr. O'Leary, Kevin, I really appreciate you coming on the channel. I want to be respectful of your time, so we're going to go ahead and wrap it out. But just one final question, I suppose. I know I already said that, but people should invest in those kind of cryptocurrencies. But, you know, taking it full circle back to the beginning of the show, is there an investment opportunity in Rolexes for somebody who's looking for that? Because you said they're down, and if you're able to somehow get one from the manufacturer, even though they're cutting production, or if they're holding a Rolex, is now the time to try and get like a fly-off position in a Rolex?
Yes, if you can get a steel white-faced Daytona, that is considered the gold standard of Rolex, although it's made out of steel. You have to remember that watch was sold for $17.2 million, Paul Newman's Rolex.
Wow.
And there's a lot of rumor about who bought it, but basically it came to market with a bid. People thought maybe it'll sell for $1 million because it's got his persona tied to it. and his wife had etched some wording to him on the back, drive safely, on it, because he was a race car driver. Within seconds of the opening bid in Switzerland, that thing went past $10 million, and it blew the top off watch collecting forever. Nobody had ever seen that before. I remember what was happening in that auction. No one even believed in it. And the minute after that hammer hit, it changed forever everybody's portfolio of Rolex watches. I have never looked back. I've never bought a Rolex that didn't go up in value ever. And I have many, 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 many Rolexes. The thing about Rolex collecting, and it's a real disease, you want every single one. I mean, I've pretty well got every single Rolex. And when a new one comes to market, I seek it out. I've got them all. The same thing happens with Patek Philippe. The same thing happens with Audemars Piguet. These are the three that people collect. But I tell everybody now, my best returns over the last 3.5 years, FP Journe. I have never, ever, ever seen anything like it. Watches that were $17,000 now trade for $68,000. Ones that were sold for $100 trade for $1 million. I mean, it's just an incredible, because FP Journe's alive. He's alive. He's the Picasso of watchmaking. If you could have bought a Picasso while Picasso was alive, do you think you would have done that? Well, it's no different, no different. Everybody and their dog is trying to buy an FP Journe. The waiting list is 2.5 years right now.
Wow, that's incredible. We're definitely going to look into some watch collecting, because I always am looking for new investments as well. But guys, make sure to go and follow Kevin O'Leary everywhere you can find him. What is your Twitter handle? We're going to put it down in the description box so that everybody can follow you over there. Twitter, obviously, we didn't even get time to talk about Twitter, but Twitter's the place to be right now, I guess, or the place not to be, depending on who you are. But don't know what your stance is on that. But if you're staying on Twitter, then let us know what.
I'm staying on it. I hope Elon takes the spatula and just scrapes that place clean. That is one of the poorest.
Good to hear that we agree on that. Good to hear that we agree on that.
It's such a poorly run company. It was miserable for investors. Since it went public, all that ever happened was a rotating door of managers issued themselves options. You never made any money. Anyways, look, I'm hoping he fixes it, but it's Kevin O'Leary TV. Same on Instagram. You'll find me on TikTok as well. And I am enjoying all the platforms. LinkedIn, I have millions of followers. I love having a dialogue with them. Join me.
Boom. Awesome. Well, guys, thank you so very much for watching. I'll see you guys in the next one. Peace.
Take care. Thanks.
Hey, you made it to the end of the video. If you enjoyed this video, you should definitely consider subscribing, because we're trying to help you become financially free in these cryptocurrency markets. And also consider following us on Twitter @CryptoJeb for more updates on the price of Bitcoin and cryptocurrencies. Peace.